doctors are actually very good at making money. But in terms of creating wealth or investing, they're really not the best at this particular financial task. And a lot of it has to do with the fact that most doctors just don't have the time to do the research and look into individual investments, especially when it comes to real estate and other properties.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 293. If you're in the business of syndication and raising money from high net worth investors, then you definitely need to know where to find your ideal investor. One of the worst kept secrets is that doctors and dentists fall into this category, and you need to know how to best approach them with your opportunities. My guest today is a neurosurgeon out of Houston, Texas, who just released a book called Prescribing Real Estate, a doctor's guide to commercial real estate. Masaki Oishi is a medical doctor and PhD and the founder of MarketSpace Capital, who specializes in introducing medical professionals to the commercial real estate investment world. Masaki, welcome to the show.
Brian, thank you for having me. It's a pleasure and an honor to be here.
I'd love it if you could tell us a little bit about yourself and how you got started investing in real estate.
I actually started not so much investing, but sort of managing real estate much earlier than first decided to go into medicine. When I was 15, my folks, who were immigrants from Japan, decided that they were going to start investing in real estate. And as the eldest of their children, naturally, the responsibility fell on me to take care of things, such as making sure taxes and insurance were paid and the rents got collected.
What kind of real estate did they decide they wanted to invest in?
They invested in an office space and also a couple of residential houses. At the time, we were living in New York City and we couldn't really afford anything inside the city, but there was a nearby suburb called Fort Lee in New Jersey, right across the Hudson River. And that's where I think they made their first residential purchases.
How would you say that those worked out for your family? And how did that cause you to transition into being an investor yourself?
They purchased those properties for about $90,000 each. This was, back in the 1970s. So obviously you have to account for asset inflation. But I think they did very, very well on those properties. And after they made the down payment of perhaps 20% of what the houses were selling for, they never made another payment again because the rental income took care of the rest.
So talk about your path. You went on to become a doctor and then also stayed an investor in real estate. Kind of explain how those two paths came together.
I had always been interested in medicine. Of course, having Asian parents tends to propel you in that direction as well. But I found that aside from being a doctor, I found myself having interest in a lot of other fields as well. Before I went to medical school, I actually spent a year working in investment banking. So investments have always been one of my personal interests, and naturally having some kind of background in managing real estate, real estate's always been very close to me in terms of personal interests and where I look to in order to invest.
At some point, you kind of went bigger. And from what I can gather, you started syndicating and raising money from other high net worth investors, other doctors like yourself. So can you talk about that? How did that come to be and what caused you to make that leap?
Well, that's actually part of the history of our company at MarketSpace Capital. When I first moved to Houston, I saw many opportunities to invest. And of course, I was a little cautious in the beginning. And so I would only do one deal at a time and make sure that everything went well. And I was able to essentially finance each individual deal on my own and roll over the money into the next deal. And, the approach seemed to work well. And after doing about 5 or 6 of these, I decided that, it's time to take the show on the road, so to speak, and look for bigger investments and also try to bring in investors who would appreciate this kind of approach.
So what kind of investing were you doing on your own? Was it multifamily and apartments? Was it single family?
Multifamily was probably the best investment that I made over the last 9 years or so in Houston. That was a 65 unit apartment complex, which did very well, actually. And I think, of course, the market was very solid, still is here in Houston. And that's probably the best deal I did. And then I made other property improvements as well. We developed a dental office in a suburb of Houston called Katy. I think that was also a very nice deal. And we've also done some development or turnaround projects for properties in rundown areas, strip malls or individual retail outlets, that sort of thing. But we always managed to make money. And so we said, we're probably onto something here. And my partner, David Rodardi, and I decided that we needed help and that we needed to bring in more talent and more investors if we were going to make this into a bigger show.
So in order to scale, you needed to syndicate and raise money for more investors.
We debated back and forth what the best way to do that would be. This was at a time when crowdfunding wasn't necessarily so solid. And so we decided we would probably just go with the tried and true method of developing private equity type of company and just start with contacting people who are either high income or high net worth individuals and might be interested in this sort of thing.
So are most of your investors other doctors like yourselves, other people in the medical profession?
Looking at our database, looking at our roster, probably about over 60%, I would say, are physicians. And of course, we don't discriminate. We'd like to welcome any investor who is interested in our approach.
Take us through the mindset of someone in the medical profession, a doctor, a physician, a surgeon. They make a good living, I would hope, but yet don't have much time to reinvest it in real estate. Maybe they have a financial advisor who advises them to put their money in stocks, mutual funds, bonds. So they don't really consider real estate. Since that's where you come from, can you take us through that mindset and how you're able to shift that mindset to, hey, why don't you also consider investing in this apartment building?
The one thing that investing in securities has over almost any other kind of investment is that it's easy. You can get on a computer and open an account and start, buying, selling, trading stocks, bonds, mutual funds for as little as a few $100s. That's very convenient. And there's nothing wrong with, someone who wants to allocate most of his assets to those kinds of very liquid securities. But to ignore real estate, especially to ignore it because of the notion that it's not accessible, is really doing yourself a disservice, in my opinion. And I think a lot of doctors fall into that category of investors. Doctors are actually very good at making money, but in terms of creating wealth or investing, they're really not the best at this particular financial task. And a lot of it has to do with the fact that most doctors just don't have the time to do the research and look into individual investments, especially when it comes to real estate and other properties.
How do you approach then someone in the medical profession? Because I know a lot of our listeners, myself included, we raise money from high net worth investors to invest in real estate. And it's good to know, where do you find these high net worth investors? Well, a lot of them are doctors or dentists. How do you approach them to consider this? Is there a certain words you have to use or language that you have to use to get them excited about these types of opportunities? When
we started putting together our database, we, of course, started from scratch. I started calling people that I knew personally. And, it wasn't quite enough that I'm a doctor too. They don't just blindly trust somebody with their money just because. We also had to prepare a investment portfolio, a range of investments that we thought were interesting and would make sense to a doctor. And we also provided the kind of transparency and support for those kinds of investors that they're probably looking for. Of course, if an investor wants to be active and wants all the detailed information about the property and how we intend to develop it, of course, we're happy to provide that. But I think once we establish a certain level of transparency and trust, then, it's a lot easier to move forward. So I don't know if there's any magic words or anything that need to be said, but I think it's definitely a situation where a lot of doctors do tend to look at these kinds of investments, and they may be a little intimidated at first, but I think if you give them enough information, if you are upfront with them about what exactly it is that they're investing in, then I think they're a lot more accepting of what kind of projects that we're involved in. I think one of the big differences between what we do at MarketSpace Capital versus what a REIT does or what other firms do is, we provide the kind of direct access and information and transparency into each and every individual project that we take up. Whereas if you're buying into a REIT or a mutual fund, you're kind of at the mercy of whoever is managing that fund. You have to trust that person, because from day to day, you really don't know where your money is. On a day-to-day level, I mean, you can wait for the quarterly prospectus to come out for a mutual fund or a REIT, but by then, of course, they've probably shifted the portfolio again. And so I think there's a big difference in those two approaches. And I think we found that when you're direct and when you provide direct access, that tends to resonate with a lot of our investors.
Now, you mentioned that some medical professionals might be intimidated by looking at some of the opportunities you might show them. Why is that? Is it just because they're unfamiliar with that asset class and that type of investment?
I think a lot of doctors are familiar with buying office space or medical office space because, that's been a staple of, running a medical practice for generations here in this country, although that's starting to change and that's another conversation. But when it comes to actual investment properties and things like industrial warehouses or, multifamily apartment houses, that is a different class of real estate, number one. Number two, the barrier to entry, so to speak, is, relatively high. I mean, if you wanted to buy into an investment, into a mutual fund, for $1,000, you could probably get in. But if you are looking to buy into, a multifamily apartment complex of any size, really, I mean, you're looking at having to put up at least, $50,000, maybe even $100,000. So that's a bit of a steep climb for some investors.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB & Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com.
You talk about transparency and how you provide transparency so that they can understand everything. What exactly do you provide when it comes to transparency?
We provide not just the usual quarterly reports, also we provide access to things such as, what kind of financing that we were looking at, and also in terms of our intentions are with the property, whether we want to hold it for the long term or perhaps have somebody else manage it. I mean, those are the sorts of decisions that, we make. And we like to involve our investors as much as possible about it. Obviously, we can't, go around consulting every single person who invested in a project before we move on some of these details. But we would at least like to make that decision process open as possible.
Do you have conference calls, webinars? I mean, how exactly do you do that?
We usually have webinars, and also we have email correspondence, and we post a lot of information on our website, actually, so that it's always available to our investors or potential investors.
So you wrote the book, Prescribing Real Estate, A Doctor's Guide to Commercial Real Estate. Why did you write that book? Who's it for? Why did you write it? And what did you get out of writing it?
I decided to write it because I found that a lot of doctors like myself, get their information from reading things. It's part of training, really. And so I thought that, rather than do a series of videos, which, we're also doing, a better way to connect with doctors is to put together maybe a pamphlet or a text that they can reference and they can look at and, have something on their library shelf that they can go back to from time to time. At least that's the way, I learned mostly about medicine and about other things as well. So I relied on my own experience and I said, a book is probably the way to go.
What did you feel you needed to include in this book? Is it really a primer for doctors who want to invest passively in real estate? Or were there some other key points that you wanted to make sure you got across?
I wanted to draw on my own experience and also to impart, some of the common sense advice that I've received and put to good use over the years. And I wanted to also, make investing in real estate not so intimidating for some investors.
So has that helped in bringing more doctors into your deals?
We only had the book up on Amazon for a few weeks now, but we've already received quite a bit of positive feedback. And I don't know if that's directly translated into people investing in our projects, but I think it was a worthwhile project for me to do on its own merits. I think if more doctors look at real estate as part of their entire, portfolio in terms of diversification, then, that would be a very positive thing for most of our fellow physicians in terms of building wealth and stability going forward.
What are some of the objections that you typically find doctors have when it comes to investing in real estate?
The major one, I think, is that doctors, they're so busy doing their job that they don't have time and they don't like to be bothered after hours after they leave the office. And yes, there are quite a few physicians out there who are more than happy to just leave their money with their bank, with their broker or, their investment advisor and never think about investing and go to the country club and play golf. And that's fine. There's nothing wrong with that. But I think more and more doctors are becoming aware that they really need to start actively planning for their future in terms of retirement, in terms of building wealth, and that, earning a good salary and having enough wealth to retire are not necessarily the same thing.
Can you take us through an example of one of your opportunities that you would bring? And you can take us through one you've done previously, or if it's a 506c, one you're doing now, an asset that you might be acquiring, how you would structure that for your investors, and typically how that would look.
One of the basic models that we use is to develop properties, basically just land, and turn them into what we call attainable housing. So we're looking at multifamily housing projects that we develop really from the ground up. And we have one that is nearing completion later this year in Houston called Spot on Anderson. And it's 155 units that's being developed. And we're doing it at record speed and also at a very, very affordable price. We are proud of this project because, we're going to use this as a template going forward. We have another project called Myra Park up in Dallas, which is also a fairly large unit project that is geared more towards senior population, very close to a medical center. So I think we'll find a very nice niche of tenants as well. And, that's kind of what we're looking for. We're looking to replicate this model where we build attainable housing, mostly middle-class housing. And we also want to make sure that it's sustainable and that we're inclusive as well. We don't want to ignore certain parts of the population, such as the senior citizens or those who may have special medical needs. We're actually looking at projects for those tenants as well.
What's the secret sauce in this project that allows you to build at a very affordable rate?
We basically have a long-term connections with, one of our partners used to be a broker here in Houston. So he gets a lot of information through word of mouth and his own network. We also have developed very good relationships with real estate management firms and with contractors. So I think that combined with our data-driven approach, we look at a property, we're actually scouring it for 28 different parameters in terms of what kind of property it is, what kind of neighborhood it's in, and whether or not it's suitable for the kind of projects that we're looking for. So I think we're very much relying on our connections, but we also like to use the data that we have and crunch the numbers as well.
And how would you bring investors in? I mean, how do you typically structure that opportunity to come in? What kind of returns would you typically project? Equity, split, that type of thing?
Ideally, we're looking for, internal rates of return of greater than 18 to 20%. And we would also look at sending out the information on upcoming projects to our potential pool of investors, our network of investors, as soon as possible to give them, as much time to digest the information. And of course, we open ourselves up to investor calls all the time. I mean, I've taken calls sometimes from doctors calling me from California because they can't find anything interesting to invest in their home state. So apparently they're coming with their money to Texas, which is very good news for me.
Any other tips from your book or just from your experiences that you'd like to share with our audience when it comes to raising money from high net worth investors?
I can't stress this enough, but high net worth investors are not some monolith. You're going to get all kinds of people, just like any other investor class. But I think when it comes to doctors, they really don't like to spend a whole lot of time outside of the office dealing with one investment. There are some doctors who are very careful and will go through the numbers and crunch them and do their extreme due diligence. But I think what they're looking for really is, an investment that is clear cut and, something that they can understand, and investment firm that they can trust.
If someone wanted to find out more about you or get a hold of you, how would they do so?
We have a website, MarketSpace Capital.com, and I also maintain a presence on social media, including Facebook. So, you can certainly contact me through either of those media, but we are happy to do private consultations for high net worth individuals and professionals. But also we welcome interest from institutional investors as well.
And your book is called Prescribing Real Estate, A Doctor's Guide to Commercial Real Estate. Is that available on Amazon?
It is available on Amazon. I don't expect it to become a bestseller, but I think if enough doctors read it, I will be very, very happy.
Well, congratulations on your success and on writing your book and getting it out there on Amazon. That's a huge thing to be able to put that out there into the world. And thank you for having this conversation with us to help us get a little more insight into high net worth investors, especially doctors, and how you're presenting them with opportunities to invest in real estate that they might not otherwise have the opportunity to do so. Thank you very much for having this conversation.
Thank you, Brian. Thank you for having me.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.